Bitcoin is not booming. Ethereum is sleeping, Cardano is yet to return to its all-time high, XRP won a partial victory and gave up his gains a few days after the win, and Solana seems like an uninteresting subject of discussion. So many things are happening, and you still want to become a crypto millionaire? Perhaps all you need is a solid game plan. Yes, we saw the Bitcoin price rocket into 2023, but it has seen its rally stall as traders fret that the Federal Reserve could be about to stage the greatest rug pull ever. Now, after the US Securities and Exchange Commission delayed its decision on the closely watched spot Bitcoin exchange traded fund application by Cathie Wood's ARK Invest, the Bitcoin and crypto market seemed braced for a flurry of SEC spot Bitcoin ETF decisions, led by the world's largest asset manager, BlackRock. A US listed Bitcoin ETF could be meaningful, as it would be associated with a significant market push that could benefit the asset class. Marcus Thielen, head of research at Matrixport, wrote in an emailed note. According to reports, the SEC is slated to make an approve, deny, or delay decision on at least 5 spot Bitcoin ETF bids in early September from asset managers that look after a combined $15.5 trillion. A decision on BlackRock's game-changing June spot Bitcoin ETF filing is due, along with bids from Fidelity, VanEck, WisdomTree, Invesco, and crypto asset manager Grayscale. Investors are eagerly awaiting the SEC's verdict on the Grayscale ETF and BlackRock applications in September. Anticipations are that the decision on both applications might be postponed, potentially leading to investor disappointment, James Butterfield, CoinShares head of research, wrote in a blog post. More ETFs will bring more liquidity to the crypto market and will stimulate market growth. Also, crypto will be better integrated into the financial system. Investors will have a wider variety of investment instruments available for portfolio diversification, another expert said. It seems like everyone is waiting for the SEC's decision. However, Bitcoin, Ethereum, XRP, and the broader crypto market pullback over the last month has been interpreted by some that an imminent US spot Bitcoin ETF approval is looking increasingly unlikely, and that is just not happening. Well, whether we like this or not, markets are now coming to terms with the realization that an immediate SEC approval for a Bitcoin ETF in the US is unlikely, to say the least. As a result, Bitcoin's price has crashed dramatically amid what seems to be a broader worry in the financial markets. The world's biggest cryptocurrency has fallen more than 12%. Other large digital currencies saw similar falls, though not as stark. Ethereum, the second biggest cryptocurrency by market cap, has lost around 10% of its value. For these losses, there was no obvious connection to the events in the cryptocurrency market this time around. Instead, investors seemed concerned about the economy more generally, and more traditional assets were also hit by falls in recent days. Wall Street's main indexes also fell, extending declines to the 4th season on a drag from a mega-cap growth stocks, as evidence of a resilient US economy fan fears of interest rates staying higher for longer. Now, the 3 main US stock indexes are on track for sharp losses, as a spat of strong economic data, including a fall in jobless claims, caused investors to dial back expectations of rate cuts and drove up government bond yields. In moments like this, it's important to remember what Cardano stands to achieve. The crypto market may not be smiling, but Cardano's goals are. Cardano is still the same blockchain platform that has set its sights high to make the world work better for everyone and redistribute power to the margins. And just like rival Ethereum, Cardano has smart contract functionality. Developers can use it to build decentralized apps and large decentralized finance platforms. Cardano calls itself a platform for changemakers, innovators, and visionaries. And let's add millionaires to that particular list. The major difference between Cardano and other cryptocurrencies is its reliance on peer-reviewed research and evidence-based methods in its development. So while most of the crypto market moves fast, Cardano veers into the opposite direction. It takes a slower, more methodical approach. The benefit is that it makes it more likely that developers will catch potential threats. However, there are drawbacks to Cardano's approach because its development process tends to take much longer than its competitors, which can cause it to fall behind. Critics have also pointed out that the peer review system has its issues, so relying on it isn't necessarily leverage. At the end of the day, long-term investing is always a smart way to go with digital currencies and cryptocurrency stocks, and this is especially important for Cardano. This project takes a slow and steady approach, so you need to give it time to develop. Even though Cardano operates differently than other cryptocurrencies, it is still highly volatile, and the prices can go through significant swings in a short period. If you decide to invest, remember that long-term changes are more important than these swings. Despite this plethora of captivating benefits, Cardano is still a victim of attacks and criticisms. And recently, the Cardano founder, Charles Hoskinson, addressed the attacks on Cardano, particularly the proclamations of its death, irrelevance, or failure by the venture capital coins, the crypto media, or maxi crowd, telling them Cardano is here to stay in his X post shared on August 14th. He tweeted, "No matter how many times the VC coins, the crypto media, or the maxi crowd proclaim we are dead, irrelevant, or failing, we always remind them that Cardano is here to stay. Cardano will become the most decentralized cryptocurrency in the world, 50 to 100 times more decentralized than Bitcoin once all of its upgrades are implemented." At least, that was what the Cardano CEO said in a 2020 during a CV Summit, a day-long crypto event which ran alongside the 50th edition of the World Economic Forum in Davos, Switzerland. Furthermore, the famous Cardano bull, Dan Garbadillo, has a positive deposition as he encouraged his followers on the X app in the wake of the massive slump in the broader digital currency ecosystem. As gleaned from Garbadillo's position, there is a need to focus more on the long-term prospects of the crypto market than what is currently being experienced. Despite the more than $1 billion liquidation that the market has experienced, according to data from CoinGlass, Dan noted that the market is even more bullish than it is bearish at the moment. Validating his claims, Garbadillo drew references to the current situations between the nation industry and the United States Securities and Exchange Commission. The market regulator has been cracking down on top players in the ecosystem, and from the layman's perspective, these firms might win most of their cases against the regulator in the long run. However, the truth remains that for Cardano ADA to have a chance in this disturbing market, crypto must increase in value. The predictions must become favorable. There has been a widely divergent update from the SEC as concerns crypto ETF products, and the regulator said that it had postponed all decisions regarding spot Bitcoin ETFs until next year. But it hinted at the possibility of approving the country's first Ethereum futures ETF as early as October. The positivity and the hope that Bitcoin ETF will make its debut on US accounts is a major reason to be excited. And drawing on this, Dan Garbadillo noted that all stakeholders in the industry have to do is zoom out to understand the bigger picture clearly. Also, the analyst who accurately predicted the crypto market meltdown of May of 2021 has given a timeline for Bitcoin setting new all-time highs. Recently, the pseudonymous analyst, Dave the Wave, told his 139,000 X followers that Bitcoin's current bear market and correction from its 2023 high will probably last until at least the end of the year. Dave the Wave has been using his version of logarithmic growth curves, which attempt to forecast Bitcoin macro highs and low while filtering out medium-term volatility and noise. Currently, Bitcoin is trading near the bottom of the analyst LGC, still in the buy zone. He said that Bitcoin could chop downwards slightly until next year before pushing to new highs above $69,000 by the middle of 2024. According to him, some perspective on the Bitcoin macro: 1. Chart showing the steepness of the price relative to the LGC and corrections. 2. Recent move up recovered a full 50% of the previous corrections. 3. This correction may last through the end of the year, 50% fib time extension. 4. Possible target fib levels for this correction. 5. Line to watch for the eventual break upward. 6. Another similar move up after the correction could see prices pushing the all-time highs mid-next year. The popular analyst says that on top of LGC suggesting a new run for Bitcoin, the monthly moving average convergence divergence, a long-term momentum indicator, has also flipped bullish. Perhaps there would be more bullish news to come. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.